Hello everyone, petar.jacimovic here. I want to post the update and my today's entry. I found very interesting opportunity on the USD versus Japanese yen, and I will explain the reasons why I'm expecting the bullish direction during the day, and you will see the power of market profile analysis, and together with also the regular type of chart and doing the regular type of analysis. So again, I will call you to join my live intraday trading room and explore and see how it looks like, and join my members and join my success. Also one information that my website will be ready next year in January, so you will also enjoy my website. There will be a lot of free stuff there, and of course all about my work, my education, my mentorship program, my live trading room, and so on and so on. I will alert you about that. It's still in the progress. So let's speak about your Japanese yen. Today I found the most interesting to trade USD Japanese yen. The Japanese yen, the reason why I found this is, first of all, we got a so strong overnight reaction, overnight momentum, right? So price traded about 100 pips. This green one, you see that this, for new traders, I'm using the TPO chart like a leading type of chart to collect price informations and to see the auctions here. I separated, I have a few charts which I will show you. And I also have third with these sessions, so auction separated by sessions. For example, this is an overnight session or Tokyo session plus Sydney session, right? And I found the most liquid overnight session on the USD versus a Japanese yen. Again, the price dropped about 100 pips. This small dot here is basically where the price and where we started this auction on the overnight session. As you see, the price traded about 95%. So 95%, these guys were net short. So traders were net short 95% on the overnight session. Now there is a one thing on the overnight session. Overnight session is pretty much traded by the weak holders usually, and it's about 65% overnight session is countered on the Europe and US sessions. The reason why, because as I said, the overnight session, there is no serious trading desks and institutional traders who trade basically the Tokyo and Sydney sessions, right? So this is probably by the weak holders for their own reasons they sold there, right? It doesn't matter what's the reason. We see that they're about 95% net short, right, in this auction, in their session, right? So now we start the Europe session, the Frankfurt session opening here. We got initial balance is the first two letters. It's not so conventional for the lower price. This is where we opened the auction. Price went trying to trade lower, finish it here, right? But then the B pair acted higher. So this is so unconventional for the lower price. These guys on the Europe session don't like, and they don't see the value. They don't want to see the lower value. We see that session traders don't accept the lower value, and this indecision in the initial balance is the first sign of potential strength incoming. Then the C pair, we see the initial balance range expansion. D and E pair, we see the one time frame trading as well on the Euro USD, where the B is low, the B is higher than lower, A, C is higher than B, D is higher than C, and so on and so on, right? So what I'm expecting, so this is about the session, so we see pretty good references here on the table, right? So pretty good reference also on the table. Okay, so this is the overnight low, right? When the Tokyo finished it, they left this low, and then price trying to trade lower, back up. They didn't have power to fuel for the lower prices, to confirm lower prices. Okay, now this is a auction is separated by the sessions. Now let's take a look, for example, the longer auctions or the daily auctions, right? What's the yesterday value? So for me, it's most important to see what's happened yesterday or what's happening in the previous days, okay? Because everything which is doing today, it must be compared with the yesterday action, okay? So everything what you're seeing today, for me, today's like today, it's only relevant if I compare with yesterday or 2 days ago or a few days ago, or if you watch long term with months ago, weeks ago. So yesterday value is pretty much sitting here all the way in 107. So the yesterday value low is sitting 117.40. 117.40. Price right now trading 116.53. Right? So we are far away from yesterday value. Far away. And far away from yesterday point of control. About 100 pips. So there is a big risk reward trade here. I want to take 1-4 ratio. I'm risking 20 pips. My take profit is about the overnight high from today. I don't want to be, you know, price may go all the way to this value, that's for sure, but I don't want, I'm happy with 1-4 ratio. It's a very great ratio for me to trade here and get out of the market if that happens. My stop loss is below the lows here. We have a buying tail in Q period here, which is another good sign that some long-term money may enter the market there. So we have a pretty good conditions that we may expect a higher price and price back all the way overnight sellers, and then try to attack even this and try to test this yesterday value basically, and the point of control. So this is one idea. This is watching the larger picture. Okay, now let's take a look at regular chart. Right. There's an interesting thing here. There's a big climax on the regular chart. There's a big climax. I want just to show you one thing, right? So this is how I'm doing analysis, and every analysis I will not put even 10%, 0.5% from my account if I don't see the old conditions that I met, and that the price, and you know, I see that from different perspectives, and that I see that there is a good chance, and most important, I have a good ratio on the table, right? And the conditions are good for that ratio. So that's pretty much what's happening right now and today. So I will for sure aim for about 80 pips. Price can even go 100, 120 pips higher till end of the day. So I just want to post this. Now let's take a look. This is a CME website. I just want to show you the Japanese yen futures chart. Just the one thing to see is I'm combining the Wyckoff analysis, the volume spread analysis, when I do the regular chart. So for example, there is a ultra big climax, and this is something I was like, oh my god, so everything is in alignment, right? So we have a regular chart. We basically took off all of the previous let's say swing highs, right? Swing high here, swing high here, swing high here. We see also on the regular chart, and this is the FX chart, that we have also climax there. But let's take a look at future chart, which is so insanely big. For example, this volume, right? Look at this. In this volume, in the 1 minute, we got the 1K contracts traded in the single tick, in the single bar in the 1 minute, right? 1,000K, 1,200 contracts in this 1 minute. In my opinion, this is so big. Someone will say this is how they catch the crowd on out of defense. They're doing this so much on the purpose, you know. They do so much on the purpose. Look, they make you to think that this is a selling, right? And it makes sense, right? They make you, right? Look at the close. They close near the lows, right? And everyone thinks, oh my god, this is a very bearish, right? So this is a very bearish. The trend is ultra bearish. If you watch all moving averages, everything is going downward, right? and you know, they go idea with trend is your friend and so on, right? And they sell here, and they sell here, but what the smart man is doing is they did this on the purpose. Look at this big climax. It's just so big climax. It's a, you know, unbelievable. It's 10 times larger than average volume in this bar. So it must be some crucial things here. They mark up this. Don't forget, this is an inverted relationship. So this is a Japanese versus the dollar on the futures market. So this upward climax, this bullish climax, is actually the bearish climax on the FX spot chart, right? Which is this one. So this bearish bar is actually bullish bar on the, because inverted relationship on the futures and the FX spot in the Japanese yen, right? And you just go for it, right? You have a good ratio on the table, very good ratio. I will go for 80 pips today, absolutely. I will try to take 80 pips today. Price may even go about 100 to 120 pips bullish today. So this is how I teach my students to observe the market. And if you want to learn my method and basically to do this smart trading, I will not say this is a blah 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 whole grail or stuff like this. You know, never wants to say like that. But what I'm teaching my members, it's smart observation and smart way of trading. Do we have a stop losses? Of course, stop loss in the integral part. Accepting the loss is one of the key part in professional trading, and cut the loss when you're wrong, right? But you know what? What's the most important here? That we got very good ratios when we take profits. So maybe you don't know, for example, but Richard Wyckoff got maybe only about 20% win ratio in his career, 20%. But his trading with average, you know, ratio of 110 or more, risk reward ratio in every single position, actually made him millions, right? So it's not important, you know. For example, if I see right now on the table that your Japanese yen got a power, I mean got a space in terms of watching the different perspectives, and I found that there is a space and the pretty good conditions. There is a climax ultra big on the futures from one side, regular charts confirming also bullishness, watching this starting of initial balance and watching progress on the TPOs from the lower TPO by TPO. We see the one time frame trading. We see that they're net short about 95%, so we expect that they counter. We have a pretty good conditions for it, pretty unconditional opening for any further lower price and so on and so on. So a lot of clues we got, information from watching different perspectives. So don't be surprised if the price till end of the day go and try to take all of overnight sellers, because these guys were net 95%, about 95% net short. Now the more we are net short, right, the more they're net short, the more potential buying covering from them can affect the market. See, this was a pretty liquid, or it's actually in terms of the price, right, 90 pips drop. All of those sellers, when they see that they're wrong and the price is progressing higher, need to cover or exit their selling, or otherwise they can lose, you know, the profit. So the more they're net short, the more potential that they need to cover their positions, right? So this is some very you saw right now pretty clean explanation about how I'm combining and using the smart observation to find the good potential risk reward opportunities. That's all about. This is all about probabilities. It's all about how much you risk versus how much you're usually going for, and how much you're able to catch, right? For me, it's look, I have a stop loss order at this point here, right? and this low here. So if I'm wrong, I want the price to confirm me that I'm wrong. Otherwise, I will let this all the way to my target area, which is about 80 pips, risking about 20, right? So this is, you catch 1-4 ratio, you catch 1-5, 1-3 ratios. You cut a loss when you're wrong, and that is how you basically collect the money, right? Of course, for that you need to have very strong foundation, let's say, of knowledge, a very strong base of knowledge. And for that I have my mentorship program, right? To teach you to doing like me, to watch different perspectives. I teach you the Wyckoff analysis and volume spread analysis and regular types and patterns on the regular chart, bar chart, and candlesticks chart. But also I teach you how to follow session by session and understand the overnight session and the relation in the TPO chart, and generally I teach you the market profile from basics to advanced, how to read the bigger picture to see where the long-term money is, to watch the long-term auctions, watch the initial balances, understand the types of initial balances, and lots of more, right? There is a lot of things here in the profile and reading the TPO chart, right? And all of this you collect references. You collect the references, and you collect everything, and then make one good picture, which you can basically base trade on if you like, right? I pretty much like today. It doesn't mean this will go. It happens that I sometimes I like a lot some position, and the price just hit stop. It wasn't ready to go in my direction. Maybe the conditions for that moment when I entered they were good, but it happens. Price don't react like you wanted, and you just need to accept the loss, like integral part of the business, and continue go on and try to find new good ratio positions and good conditions for next positions. Also, one thing here, it's much better to build no positions. I'm a day trader. I'm an intraday trader basically, right? I try to take position early session, from London session, right? So I have a goal for today, right? And it's pretty a logical objective point, right? It's logical because comparing to yesterday value and yesterday point of control, there is a pretty good space, right? So I don't compare this to five days ago or a month ago. I compare what relative to yesterday. That's what I care. Relative to yesterday, relative to previous day, right? So I found a good space there, and I will try to take potential 1-4, which I'm going for, and price can even go, for example. So my target is around 117.25. This is overnight high. I'm pretty much fine with that. This is a 1-4 ratio. I exit there, and I pretty much don't care. But price can even go to this area, which is point of control from yesterday. All right. This is a yesterday low, 117.3. Price will potentially try to back here in yesterday range, and this is where is my target, right? This is what I'm aiming for. Price will potentially try to back here, right? And then there I scale out position, but price may also go and try to test this point of control, maybe even go higher, depend on the volatility, momentum, so on, right? Okay, so this will all for this video. I hope you enjoyed this. If you like my video, feel free to subscribe my YouTube channel, and also like or comment my video. Also, don't forget to join my live intraday trading room and see how I'm doing the live analysis right in front of you. You join by go to webinar, go to meeting, and you watch me how I observe the market live. You can ask questions there and so on for only $20 a month. A subscription. You can add me on the Skype for more details. I'll put my Skype username in the description of the video. And of course, if you want to start my mentorship program, it's a 20 days course. I increase the duration of the course. The price is larger. It's a 3,000 euros for my mentorship program, including so you will get also a member area on my website, my new website. You will have, I educate you on the knowledge of the Wyckoff analysis, of volume spread analysis, regular type of chart, and I teach you to watch the market profile from basics to advanced, to watch the separated sessions profiles, and to understand this, how we look this one, and to understand how we look larger picture, how we combine everything, watching also the futures market, and so on and so on. I hope you enjoyed, and have a good day, and trade safe. Bye bye.